Let's speak now to Eugene Du Toit, who is the Financial Sector Conduct Authority's Regulatory Framework Head of Department. Mr. Du Toit, thank you for being with us. What does this practically mean for somebody who owns cryptocurrency, say Bitcoin, or somebody thinking about it?
Thanks for having me. From a practical perspective, for people that already invested in crypto assets, it does mean that there will be going forward some oversight. So if they dealt with intermediaries, which includes exchanges, as was mentioned, there are certain obligations now imposed on those exchanges, and they need to disclose relevant information, and they need to share a variety of other things with customers so that they are aware of the risks. The problem comes in with customers that already invested versus customers that haven't invested. I think the protections are more aimed at the future and going forward. Unfortunately, the customers that already invested wasn't aware of the risks when they invested. But as I mentioned, there will be some ongoing obligations which will mitigate some of these risks. But it's really focused on new customers and making sure that they are aware of what they're investing in before they actually invest.
So what information are you going to look for? Because the problem, or some see as an advantage, but for regulators, the problem has been that you don't put your name on the currency. You can buy things anywhere and nobody knows, but you do have a wallet. Somebody's got to sell you the crypto initially. So will you be getting information from those providers?
Correct. Part of this framework that we're rolling out entails information gathering powers. So we will, through returns, request specific information from crypto asset providers, and they will then need to report this to us. We've also in the process of developing what we call a conduct of business return, which highlights various high-risk areas, and we need them to report information in respect of these high-risk areas. So that will enable us to identify where there might be risks and then act accordingly and intervene where these risks might be present.
So am I right to say that you will know, or you can find out, if somebody buys cryptocurrency in South Africa using Rand or whatever, and then they sell it and get the money, but in the interim, you don't know where the cryptocurrency, how it's being used across the world? Does it really clamp down on money laundering, on terror financing, the big concerns that have been there?
Yeah, look, we won't have the data on a transaction level, so we won't be aware of all the data that is all the transactions that happen on a daily basis. That's definitely not the intention here. The intention is more looking at from a holistic perspective. And in terms of anti-money laundering and terrorist financing, that is a big risk. One thing that this declaration does do is it brings in crypto asset providers within the scope of the Financial Intelligence Center Act. So they would be accountable institutions for purposes of that act, which looks at money laundering. They will need to report certain transactions, and that will give us a much better indication of where there might be potential money laundering. So although it's not on a transaction level, in all instances, there will be information flow that will put us in a much better position to actually regulate these types of things.
All right, so you could potentially pick up red flags. The whole point, well, people who like cryptocurrency like that it's not linked to a central bank. They've spoken about privacy, the fact that it's borderless. You've obviously looked at regulation around the world. Do you think a balance is being found between sort of protecting the advantages, but also making sure that it's not used dubiously, that there is some form of regulation?
Yes, I do. As I've mentioned, if you drill down to a transaction level and you start analyzing all of the transactions, it has an impact on confidentiality and all of those things. So looking at it from this perspective that we are looking at it holistically, looking at red flags and aspects like that, does strike that balance between obtaining or retaining rather the advantages, while still having some oversight of what's going on and picking up those types of red flags. So there is definitely advantage, and I think it is very much in line with how the world, regulators across the world are starting to approach this.
Is there anything that holders of crypto should know? what I can think of is if it goes up dramatically, you declare an investment profit or maybe a loss. Is there anything that they should be aware of that they are duty bound to do?
Not that they are duty bound to do, but rather be aware of the risks involved in investing in crypto assets. So that's where things like disclosure, needs analysis, so where we talk about advisors advising clients to invest in crypto assets, doing a needs analysis for that client to ensure that it is actually appropriate investment is critical. Because currently there's no oversight in that regard. It's basically the Wild West in terms of investing. And we need to bring in those types of controls that results in a more controlled environment and limits who should actually be investing in crypto assets. That's the intention of regulating the advisor space also. It should only be advised to invest for very specific types of clients. But disclosure is key, I think. I've mentioned the risks of volatility, etc. Clients must be aware, because the informed client, uninformed client can't make an appropriate investment decision. So that's where disclosure is quite critical.
And advisors themselves have to be educated about the assets that they're talking to their clients about. That's the idea.
Correct. That's part of the requirements that we're imposing is appropriate qualifications related to crypto assets. So they should know what they're talking about. Also appropriate experience in relation to crypto assets. So you can't start selling crypto assets tomorrow and advising clients to invest if you don't have any experience in crypto assets. So that's all part of the requirements, yes.
All right, thank you for that explanation. Eugene Du Toit, Financial Sector Conduct Authority Regulatory Framework, HOD.